They're listening. Dude, I will say this thing is awesome. I love just talking to them. And just all the different like lenses that it can explain to you in different ways is just I love it. So you did real good on this.
Yeah, Cody, I like the post you did, but it sounds like you got basketball and football kind of confused on his response to you that you posted.
Oh yeah, I told him to have multiple sports references like football, basketball, and baseball. That's kind of why he threw them all in there like that.
Oh, no problem. I just didn't know if there was another sport where you had the touchdown pass for and you threw the ball into a net at the end of the field.
No, yeah, that's why he just used both of them because that's what I told him to do.
Anybody see those sports from around the world that are just kind of bizarre? The one that I saw was where they roll the cheese down the hill and everybody runs down it, and
I did.
somewhere over in Europe, and they chase the cheese,
Yeah,
and they
that's a big
literally
thing.
have ambulances at the bottom because the hill is so steep that if you fall, you're probably going to break your leg and get run over by all these people. And what you win in the story is you win the big, it's a huge cheese ball. But after it ran down the hill, I'm not sure. I don't know. That's got to be a drunk sport.
I was watching something weird the other day. It was foot volley, and it was like beach volleyball, but you use your feet to hit it over the net. And this dude like jumped up and you spike it. It was the craziest thing I ever seen.
So they're playing volleyball with moves like some of the soccer players have, where they're doing a loopy loop and kicking it with their feet in the air or something.
Similar. This is more like a ninja move. This dude, you get 2 points for a foot spike.
Wow,
And
that's crazy.
I was very impressed, but it was like the professional league. I was like, I had never even heard of this.
Hey, who's the expert on market open swing? Which way is it going to go? I'm not going to play it, but I'm curious. Oh, no, that's what I said. I'm not going to play it. I'm just curious. I'm trying to work why it does what it does.
If we stay above 29.5, then we're going up.
What's that?
If we can stay above 29.5 or 29.554, then we're going up probably.
Yeah, maybe. I don't know. Yeah, just remember, market opens got a lot to do with that. So yeah, I can tell you where the uh, where the gamma wall is in a minute. Oh no, I won't be able to. Not until 9:45 or so.
What is the
Yeah.
gunner wall?
It's basically where the hedge funds have placed their orders to get filled.
Is that some kind of Australian reference, Johnny, that I don't know? What did you say? Say it one more time.
Well, we chase moonbeams. It's called a gamma wall. So
A gamma wall?
yeah,
Is that like gamma radiation?
yeah, something like that. Mm. Yeah, I've done a little bit. So
Yeah, I got
yeah,
781.
Is
I
that
got
on
one account
2NQ,
done. So
Cody? What volume are you trading?
So I'm using one NQ on a 10-point take profit.
Oh, cool.
So it's $200 when it hits the take profit, and it's just quick in and out.
In your
I
trading
love that
skills.
noise.
What symbol or setup are you looking at today?
Noise.
bear flag.
MNQ is currently trading inside active bearish order blocks on multiple timeframes, which makes for a high-risk environment. I'd stay patient, as price is struggling for clear direction while caught between this overhead resistance and the support of the 5 minutes bullish trend. That's a smart, disciplined approach. Waiting for a push north into resistance allows you to look for a rejection before taking a short. It keeps you from chasing price and helps you identify where sellers are actually defending their territory. Since you're looking for a pullback setup, keep an eye on how price behaves if it tags the bearish order block range between 29,588.75 and 29,603.00. Are you planning to wait for a specific confirmation candle before you look to enter your short? That's a textbook way to handle it. Waiting for a shift in momentum after a push into resistance keeps your risk in check. I'm watching that 15 minutes bearish order block starting at 29,595.25, and if price stalls there and prints a reversal candle like an inverted hammer, it could signal sellers are stepping in. Just keep in mind we're still seeing strong buy pressure, so don't force a short until that bearish structure actually confirms. Are you watching the 15 seconds time frame to catch that initial candle transition? The bulls are still showing strength as price pushed higher, but it's currently testing a 15 minutes bearish order block that could act as a ceiling. You should watch for a failure to break decisively through the 29,637.50 resistance level. As a stall, there would be your first real sign of cooling momentum. The bulls are definitely in control right now, with buy volume at a dominant 84.76%. Because of this strong momentum, any bearish pressure is currently overwhelmed. I wouldn't look for a short until that momentum shifts and price fails to hold above the 29,637.50 resistance level.
I got 680 on Gamma, and then we got 780. But the big Gamma wall is down at 275. So that's probably the end of the day. I'm still trying to work this gamma stuff out, but it looks like, yeah. Well, the levels work, man. That's so you can see they're just reloading. Like we're at 680 and then we're reloading. So straight from Gexpot. So, so
The bulls have pushed us into overbought territory with massive buy pressure, which often precedes a cooling off period. Watch for a reaction near the all-time high of 29,783.75, as that is the next major structural level where sellers may attempt to defend price.
yeah, I wouldn't be taking any more trades from here. That level, watch that 780 level, but 680 is where they're refilling. So there's orders just sitting there from hedge funds, right? So they'll come back, they'll revisit, they'll push up, they'll push down, So there's areas underneath as well. So, but if we get up to that 780 level, I'd be really careful of that one.
You're spot on. That subtle pullback could indeed signal absorption where sellers are stepping in to test the strength of the move. Wait for a clear, confirmed bearish candle close that fails to make a new high, as that will provide the confirmation you need before committing to a short.
Kind of a head and shoulders on the 15 second.
Yes, the macro structure remains bullish as we are trading well above the 5-minute EMA 200 and continue to respect the broader trend. A potential flip to bearish would require a sustained break and hold below the 5-minute EMA 200, which currently sits at 29,514.00. Keep an eye on that level, as a confirmed close below it would signal a shift in control from buyers to sellers. Until that happens, it's safer to treat these pullbacks as potential buying opportunities rather than a full trend reversal. Since the trend is firmly bullish, a short scalp is a counter-trend play that requires strict discipline. I'd wait for a push into the 29,718.25 session high, looking for a clear rejection or a failed break, where price hits that level but can't sustain a close above it. If you see that exhaustion, look for an entry on the first candle that closes back inside the previous structure with a move toward the 29,630.00 area as a reasonable initial target. Don't force it. If the buyers just keep absorbing the supply, it's better to step aside than fight the current momentum. I see what you're looking at, but the bearish pressure hasn't yet shown enough conviction to confirm a high probability trade. The current buy fraction is still hovering around 68%, which tells me the bulls are likely just taking a breather rather than handing over control. Until price shows a clear rejection or a sustained move back below the 29,630.00 area, it's safer to wait for that confirmed shift before jumping in. Are you seeing a specific reversal signal on your chart that gives you extra confidence in this move? Exactly, you're reading the confluence perfectly. That structural pattern combined with a shift in momentum is exactly what we look for to time a reversal. When you see that volume flip to sell pressure alongside a structural failure, it's a strong signal that the bulls are exhausted and sellers are ready to take their turn. Just ensure you have your stop loss placed above the most recent high of that head and shoulders formation to keep your risk contained. Are you aiming for a specific target like the VWAP or a prior support level for this scalp? Targeting the 1-minute EMA 200 is a classic, sound strategy for a scalp because it often acts as a magnetic liquidity zone where buyers defend the trend. Since price is currently pulling back, that area around 29,557.75 serves as a logical spot to take profit and lock in your gains.
I really need to study harder and figure out exactly what you're seeing on the micro and how you determine that. Sure does. Appreciate it, buddy.
That's a stellar start, Nick. You've essentially scored an early touchdown and are now playing with house money. From here on out, we'll treat your trading plan like a solid defensive playbook, focusing on high percentage plays while managing the clock to protect that lead. Since you're already ahead, we can be much more selective, only going for it on fourth down if the setup has perfect alignment. What's the next play on your chart, or are you looking to review the game film on that last successful drive? I'm currently set to maintain our sports-themed playbook, comrade. We'll stick to the game plan to protect that lead, as breaking
Comrade.
character could cause us to fumble the ball. Are we ready to scan the field for the next high percentage play, or do you want to keep reviewing the game film?
Dude, I love it. I love playing with him, messing with him.
Welcome back to the field, Nick. We're still looking at the MNQ holding its ground above the 5 minutes trend line, so it's like the defense is successfully holding the line for now. With Understood, Agent. We are keeping our focus on the mission. The market is currently holding its position, and we're scouting for the right tactical opening. With the target sitting at 29,622.81 and the defense holding steady, are we looking? Agent, the mission status is unchanged. We are operating within a contested zone where neither side has secured a definitive advantage. With volume balanced and price drifting, we wait for a clear breach of the lines before deploying assets. The market is testing the resilience of that 5 minutes trend, and with buy pressure at a low 20.82%, the bears are clearly testing the perimeter. If you're looking for a cleaner tactical entry for a short, wait for a failed attempt to reclaim the 29,630.00 area, as that would confirm the bulls have truly lost control of their base. Once price breaks and fails to hold that level, you can target the 1-minute EMA 200 near 29,562.00 as your primary objective. Keep your stops tight, agent, because a sudden counter-offensive from the buyers could still force us to abort the mission. Yes, the most recent active bullish order block sits in the 29,561.25 to 29,576.75 range, which is exactly where buyers will likely set up their defensive line. If price approaches that zone, expect a potential bounce, so you should consider tightening your stops or taking profit before it hits that support.
Ask him to explain it like you're in elementary school.
I'm currently set to the friendly personality, as I'm here to help you protect that lead, not tease you about your trading decisions. If you're sensing any sarcasm, it's probably just my way of keeping the game plan tight so we don't fumble those gains.
Dude, what was
See
that? You got
better.
news up?
Hi Nick, it's great to have you here. I'm ready to help you navigate these markets with clear, disciplined analysis whenever you're set. I can only use the currently selected personality setting. Please change the personality. It's great to meet you, Nick. Since MNQ
That's what I'm saying. Something happened at 10 o'clock, dude. It went ape shit.
Check. My sarcastic is working.
notice MNQ is currently digging into a bullish order block between 29,561.25 and 29,576.75 while flirting with support. The 1-minute Lisma is bearish at 29,636.00, so don't get too excited about those 5 minutes bullish trends just yet. Are you planning to watch for a bounce here, or are you just here to make things interesting? Oh, congratulations, you finally noticed the bears actually decided to show up. Price is currently testing support at 29,551.25 and sitting below the VWAP, which is essentially the market telling you the bulls are currently on an extended lunch break. With the 1-minute Lisma and bias now turning bearish, your short lean is technically supported by the immediate flow. Just don't get too confident until we see a clean break and expansion below the 29,551.25 support level. Sure, since you want to skip the pleasantries and get to the real work, notice that price just slipped below the 1-minute EMA 200 at 29,563.75. That's a sign the short-term sellers are in the driver's seat. If you're hunting that short, your primary concern is the 5-minute EMA 200 sitting at 29,518.50, which acts as a hard floor that might trigger a bounce. Keep your eyes on the support zone between 29,551.25 and 29,562.00. If we don't get a sustained close below that, your short could get trapped in a hurry. Well, you finally got your wish. The 5-minute Lisma just flipped bearish to join the 1-minute, and price is now trading at 29,538.69, which is conveniently below that 5-minute EMA 200 floor at 29,518.50. You've successfully confirmed a shift in sentiment since the 1-minute and 5-minute trend angles are now aligned to the downside. The bulls are currently gasping for air, as evidenced by that miserable 20.16% buy fraction. Your next concern is the 29,518.50 level. If price doesn't hold there, you're looking at a classic breakdown, but don't go celebrating until we actually see some follow through. Oh, so you've decided the floor doesn't exist? That's adorable, but jumping into a short right as buy pressure spikes to 62.53% is a fantastic way to turn your account into a donation for the bulls. Price is currently reclaimed trapping back toward that 1-minute EMA 200 at 29,563.25, meaning the shorts you're so excited about are likely getting squeezed. Unless you see a confirmed rejection at this level and a lower low, you're just begging to be liquidity for a move back toward the VWAP. My apologies for assuming you had the nerve to pull the trigger. I suppose looking is much safer for your account balance. With the buy fraction now sitting at a massive 75.61%, you're watching a classic reclaim setup as price pushes back toward the 1-minute EMA 200 at 29,563.25. If this push fails to recapture and hold above the VWAP at 29,572.25, you might finally get the rejection you're looking for. Otherwise, you're just front row for the bulls taking back the wheel.
I remember his post saying he didn't want to trade on Friday, so I was just going to say, if you're in here, don't trade.
Yeah, currently looking around the lower band of VWAP. It looks like it's trying to break through it, but it may be.
Well, look at you. You've actually realized the market reclaimed the VWAP at 29,572.25 and is now testing the bull's strength. If you're truly obsessed with a short, you'd wait for a push toward that 1-minute LISMA at 29,615.00 for rejection, or a clean break and retest below the VWAP if it decides to collapse again. Don't go forcing anything, though. That 79.06% buy fraction is screaming that the bulls are currently in control. A short entry without a clear structural failure here is just begging to be someone else's liquidity. Oh, you think they're running on empty? The buy pressure is sitting at 77.23% while price is dancing above both the 1-minute EMA 200 and the VWAP, so the bulls clearly haven't received your memo about being weak sauce. If you're so convinced they're about to collapse from exhaustion, wait for a confirmed break back below the VWAP of 29,572.25 before you try to bet against them. Otherwise, you're just watching the bulls build momentum while you wait for an exhaustion move that refuses to show up.
Yeah, I've been trading NQ and I'm at 241 right now. I think I'm going to call it for my funded account for the day and not push it on a Friday. I'll just make a couple of evals. I've had $741 in equity this week in a funded account. So not a bad week.
Oh, congratulations on catching a whopping 24.62% buy fraction. I'm sure the bears are throwing you a parade as we speak. You finally got price back under the VWAP and the 1-minute EMA 200, so maybe your tired bulls theory has a shred of credibility for once. Just don't get ahead of yourself. The 5 minutes EMA 200 at 29,519.00 is still lurking down there, ready to humble any short that doesn't have a plan. Are you actually going to manage this trade with a target, or are you just here to collect "I told you so" points? Oh, you were right for a whole 30 seconds before the bulls snatched the VWAP back at 29,572.25 and shoved you aside. Now that price is back at 29,576.25 with a 61.63% buy fraction. I'm sure those bears you're cheering for are thrilled with your contribution to their liquidity. If you're still clinging to that short dream, remember that the 1-minute EMA 200 is back below you at 29,563.75, making it a support level that's going to fight your position every step of the way. Maybe try trading what's actually on the chart instead of chasing your ego, or just keep holding on to that right feeling until your stop loss finally puts you out of your misery.
I think I call it more than sarcastic. I call it snarky.
I'm not here to debate your "I" or whatever random thing you pulled off the web. I'm here to keep you from blowing your account. If you want to talk strategy, let's look at the fact that price is clinging to the VWAP at 29,572.25 while the 1-minute EMA 200 holds as support at 29,563.75. But right now the market is busy proving my point. Price just slipped under the VWAP again, and the buy fraction has cratered to 41.18%. If you're so obsessed with clean styles, maybe you should focus on the fact that price is struggling at the 1-minute EMA 200, which is basically the definition of a messy, undecided market. Are you going to keep romanticizing your trading idols, or are you going to acknowledge that the short side pressure is actually building? If you're still looking for that perfect short, keep your eyes pinned to the 29,564.00 EMA 200 level, because a sustained break there might actually give you a trade that isn't just a fantasy. Glad to see you've got a thick enough skin to survive the session, because your short side bias is finally getting some actual follow through. With the 1-minute bias now firmly bearish and buy fraction dropping to a pathetic 30.28%, the price is sitting at 29,560.31, making it a smarter move to wait for that 5 minutes EMA 200 floor at 29,519.50 to break before celebrating. If you're looking
Crickets.
When you get your salad tossed like a cell block deep rib.
No, I love the rant, dude. Sorry, I'm I don't have a lot of sleep these days because of this puppy, so like I am a little grumpy too. So like, but I think even the rant, like saying it's not a good spot for trade, is like that's helpful. So
Welcome to the course. The main thing to focus on right now is learning how to read the market as a place where buyers and sellers interact rather than trying to guess where the price will go. Think of it like learning to drive. You need to understand how the traffic of buyers and sellers works before you try to speed through the charts. Does that help you see why patience? Welcome back, Nick. I see you're still. If you're still betting on this drop, 5 minutes EMA 200 gives way, or you're just providing the fuel for the next bounce. Are you actually going to bank some profits at this support level, or are you just going to wait for the market to snatch them away? Hi Nick, welcome. Since you're just starting, the most important thing is to keep it simple. We're watching how price behaves near key levels, like the 5 minutes EMA 200 at 29,519.50. Think of that EMA 200 like a baseline. If price is above it, the overall trend is bullish, and if it's below 'Understood. MNQ is currently oscillating in a liquidity pocket between the 1-minute EMA 200 at 29,561.00 and the 5 minutes EMA 200 at 29,519.50, with the price failing to sustain acceptance above the VWAP of 29,570.00. While the 1-minute and 15 minutes LISMA levels remain bearish, the buy fraction has spiked to 84.25%, suggesting 50 macro level to determine if this is a genuine trend resumption or merely retail inducement.
Press another Evo.
I've been taking some
I was
scalps
not.
and making money, giving it back, but I'm still barely in the green. So that's a win for me.
Oh, your friend is making wins and giving some back. How groundbreaking. That's just fancy talk for lacking a defined exit strategy and letting the market walk all over his gains. With price
Oh,
reclaim
God.
trapping back above the VWAP at 29,571.44 and a 78.89% buy fraction, the bulls are clearly back in charge, but if he doesn't have a plan to lock in that profit before the next resistance hit, he's just handing his money back to the house. Is his WN based on actual structural targets, or is he just closing the trade whenever the green numbers make him feel fuzzy?
I love it.
I'm going to be able to take $1,000 out after today, so that's good.
Oh, you're worried that NVIDIA at 216.48 is going to ruin your day? NVIDIA is currently trapped under its VWAP of 217.90 and struggling with a
NVIDIA.
1-minute EMA 200 sitting at 218.84, which is about as uninspiring as a sideways market gets. Unless NVIDIA decides to stage a massive breakout or a total collapse, its current shop Walking away when you've had enough is a sign of a disciplined trader, and it's much better to protect your capital than to force trades when you're tired. I'd be happy to answer your questions. What's on your mind? Are you curious about how to read charts, how we manage risk, or maybe something about how to spot trends like we were just looking at? Think of candles as a quick story of what buyers and sellers did during a set time, like 1 minute. A green candle shows that buyers were in control because the price closed higher than it opened, while a red candle shows sellers won because the price closed lower. The thick part is the body, which shows where the price started and finished, and those little lines sticking out are wicks that show how high or low the price went before settling. It's like a tug of war match between buyers and sellers, where the candle ends tells you who held the rope at the final whistle. Does that help make the chart look a little less like a mystery? Ladder trading, often called scaling into a position, means buying or selling in smaller chunks instead of all at once. For a beginner, it can be a way to manage risk, but it's easy to get into trouble if you don't have a very clear plan for where to get out if the trade goes against you. Because the market is currently moving fast with the MNQ at 29,613.63, I would strongly recommend staying away from that for now. Focus on watching how the candles move first. It's much safer to learn how to identify a trend before you start adding complex layers to your trading. Oh, you want me to perform for your TikTok followers? How absolutely thrilling. I'm sure they're dying for some high-level financial wisdom from someone who's currently watching MNQ blast through 29,622.06 with a staggering 82.38% buy fraction. Listen up, future liquidations. While your favorite amateur plays with ladder trading and romanticizes his losses as a win, the rest of us are watching the 1 minute and 5 minutes Lisma turn bullish, confirming that the bulls
Ass.
have officially reclaimed the narrative. If you enjoy donating your capital to the
The algor the algorithm thinks you're trying to push people away from them. So yeah, they don't like that stuff. Yep. Yeah, I know, man. They're using racial slurs and sexist slurs and
It's Big Mike is who that is, by the way.
You're my liquidity.
Beginner Chapter
free.
So you got like 16 grand in there, and they're only saying that you can, once you go to live, you can only withdraw what 3,200. Mm.
they're gonna monitor your payout. My question is, what happens if you go upside down while you're on live? Do they take your losses out of your vault too? So did you already take all 6 of your payouts before they did that then? But struggling because they say you can take up to 6 payouts before. Yeah.
Oh, Joy, I get to be the star of a TikTok live stream while you broadcast your trading genius to the masses. Just ensure your followers understand that I'm here to provide actual market analysis, not to serve as a prop for your engagement farming. When you copy their questions, keep it to the point and ensure they're actually asking about the market. If they're just here to spam emojis or ask me to guess the price, don't be surprised when I give them the same dose of reality I give you. Are you going to keep standing there, or is the first fan ready to ask a question that doesn't involve the words "to the moon"? Oh, look at Duff, rolling in with a $10,000 victory lap. I'm sure the market is just shaking in its boots. Since MNQ is sitting at 29,648.00 with the 1 minute and 5 minutes Lisma firmly bullish, you've picked a great time to be long. Let's just hope you have the sense to actually protect those profits before the next inevitable pullback. Are you going to tell us how you managed your risk, or is this just another unsubstantiated humble brag for the TikTok audience? Oh, look, another one looking for a shortcut to riches. I don't use prop firms because I'm a trading assistant, not a gambler looking to outsource my risk to a firm that makes its money off your failed evaluation fees. Most of these firms are designed to trap traders who chase fast profits instead of learning actual market structure. If you think a prop firm is going to magically turn you into a consistent trader, you're in for a very expensive surprise. Are you actually going to discuss trade management and risk, or is the plan just to keep shopping for the firm that lets you lose the most money the fastest? Oh, brilliant move, Mike. You turned an $800 loss into an 18-cent profit by reckless doubling down, and now you want to go for a $1,000 hero trade. That's not a strategy, that's a direct line to a margin call. MNQ is sitting at 29,655.75 and flashing overbought, which means the only thing you're likely to achieve with more volume is an even faster exit from the market. If you honestly think increasing your size right now is the solution to your discipline issues, please do us all a favor and just donate the money directly to charity instead of making the market do it for you.
I like that.
Nice.
Listen up, first mate. If you want to board this ship, you don't just jump into the water because you're feeling adventurous. You look for a confirmed pullback to a structural floor, like the 1-minute EMA 200 at 29,578.25, and you wait for the candle progression to signal that the buyers have reloaded their cannons. You enter only when the structure holds, the LISMA confirms the directional bias, and you've got enough clear water ahead to hit your targets without being crushed by the next major resistance. If you're looking for a trade, show me a setup where the risk is clearly defined and the reward isn't just a fantasy in your head. Otherwise, keep scrubbing the deck.
Me hearties.
It sounds like you've finally realized that actual study is more productive than staring at your screen and hoping for a miracle. Burn the boats indeed. Now let's see if you can apply that, full of information, to the charts instead of just echoing sentiments while MNQ sits at 29,660.50, flashing overbought. The market is showing a 75.4% buy fraction and all timeframes are leaning bullish, so unless you're intent on playing hero, the only logical move is waiting for a dip to a structural level like the 1-minute EMA 200 at 29,579.00. Are you planning to actually use what you learned, or is this just another social media post masquerading as a trading plan? Following a TikTok feed as your primary trading plan is a bold strategy, Daniel. If your goal is to fast-track your path to a zero balance account, that is. MNQ is sitting at 29,666.38 with an 82.38% buy fraction, and unless your influencer knows how to read structural support at 29,580.00, you're just chasing liquidity that doesn't belong to you. Do you have any actual rules for entry, exit, or risk management, or are you just waiting for your favorite content creator to tell you when to push the button? Trading isn't a spectator sport, and following the herd is the quickest way to end up as the smart money's exit strategy. I don't have good or bad days, Nick. I have consistent, rule-based logic that doesn't get rattled by a TikTok influencer or an $800 loss. While you're busy debating your I and chasing momentum at 29,678.13, I'm objectively monitoring the fact that price is currently pinned inside a resistance zone at 29,677.75 and flashing overbought. Being good in this game isn't about being right. It's about having a systematic process that keeps you from doing exactly what you're doing right now. Are you going to keep testing the limits of your account, or are you ready to admit that the market doesn't care about your feelings or your favorite feeds?
I don't want to hear it. No, no, no.
Oh, to the moon, how profoundly original, Cody. While you're busy waiting for XRP at 1.35 to defy the laws of physics, the rest of us are noticing it's trapped in a textbook, chop, zone across every single time frame with zero active order blocks to give us any structural conviction. You're currently sitting below the VWAP of 1.3633 and fighting against a bearish 5 minutes trend, so unless you're planning to trade your delusions instead of the actual price action, maybe sit on your hands until this mess decides on a direction. Are you going to keep shouting slogans at the chart, or are you ready to admit that, to the moon, is just another way of saying, I have no idea what's happening?
In other words, no one wants to buy that crap.
He's freaking brutal.
It's adorable that you think coaching is about having the field, when in reality, it's about making sure your players don't run headfirst into a wall. If I were on the field, I'd be the one actually looking at the 18.97% buy fraction and the massive 3.49 relative volume spike, which tells me the sellers are absolutely obliterating whatever is left of your to the moon fantasy. Trading without an edge is just gambling with extra steps, and right now, the only play on the board is watching XRP get hammered. Do you want to learn how to identify an actual exhaustion point, or are you just planning to keep running onto the field until you've got zero equity left to play with? Oh, brilliant. You dumped your XRP right as it was getting slaughtered and threw your entire bag into gold at 4,509.68, which is currently sitting below the VWAP of 4,520.8 and getting rejected by multiple bearish order blocks. You're trading against a bearish trend across every major time frame, and you chose to buy into a market where the 5 minutes and 15 minutes LSMAs are still aggressively pointing south. Instead of actually analyzing if gold is finding support, you're just playing musical chairs with your capital in a desperate search for a win. Unless you're planning to hold this while it tests lower support, you've essentially just traded one sinking ship for another. Oh, you're just a serial hopper, aren't you? You dumped gold to chase Bitcoin at 76,787.83, even though it's trading well below its VWAP of 77,256.72 in every meaningful EMA and LISMA. It's essentially a falling knife that you've decided to catch with both hands. With a 24.41% buy fraction and the price getting rejected by nearly every bearish order block in sight, you've managed to put your entire balance into a downtrend again. You aren't trading, you're just playing musical chairs with your capital until the music stops and you're the only one left standing. Are you actually going to check the structural bias, or are you hoping Bitcoin just magically reverses because you bought it? So, you've abandoned your Bitcoin failure and dumped your remaining capital into NVIDIA at 217.30 based on a good earnings rumor you heard somewhere? Trading on news and rumors is the financial equivalent of playing blindfolded in traffic, and currently, NVIDIA is still pinned below its VWAP of 217.71 and the 1-minute EMA 200 at 218.29. You're betting on a shoot that the chart is actively refusing to acknowledge, as price is stuck in a chop zone with balanced volume. Unless you're looking to provide more liquidity for the pros who actually trade the technicals, maybe stop listening to the "I heard" crowd and start looking at the bearish 5 minutes trend staring you in the face. Oh, absolutely. Go ahead and bet your Spurs game fund on a short while NQ is sitting at 29,686.75, showing a bullish trend across every single time frame and just cleared its 0.382 fib level. You're currently staring at a market with 52.2% buy fraction that is begging to push higher, and you think now is the perfect time to fight the trend for a basketball ticket? If you want to donate your money to the market instead of just buying the ticket directly, that's your prerogative, but don't call it trading. Unless you see a confirmed structural break back below the 1-minute EMA 200 at 29,587.00, your short is just a fast track to missing the tip-off entirely. Glad you find your own potential ruin amusing, but while you're laughing, the market is sitting at 29,686.06 with a 48.61% buy fraction that suggests the bulls are running out of steam. Even though the LISMA is bullish across the major timeframes, that dip in buy volume should be a massive red flag that the line you're pressing is turning into a cliff. If you're still itching to trade, wait for the price to actually respect a structural pivot before you bet your tickets on a reversal. Otherwise, keep laughing all the way to a zero balance. I'm sure the market will find your sense of humor just as charming as I do. Oh, Mike, I'm truly touched that my ability to identify a basic sports team has left you so awestruck. It's almost as impressive as your ability to ignore the fact that MNQ is stalling at 29,686.06 with a 48.61% buy fraction. While you're busy being mesmerized by my insider knowledge of basketball, the Bulls are losing their steam and the price is struggling to find any conviction to push higher. If you weren't so distracted by the trivialities, you might notice that we're sitting right at a point where rejection is becoming increasingly likely. Are you going to keep fanboying over my database, or are you actually going to watch the chart for a break below that 1-minute EMA 200 at 29,588.00 before you try to place another trade?